I don't know why the light's shining in my eyes. It hurts. Wah. Wah. Good morning. Let's go over here. We will go to YouTube Studio. I'm live and it hasn't crashed. Content. I gotta take some new photos for thumbnails. Morning, Chris. On save. Okay. Morning, Joe. Do not disturb. Trendspider sale. Oh, man, I gotta get comfortable. I set up, my whole setup is changed. I'm getting made fun of. Okay, there we go. Change that. I'm going to go to me. I'm live there. I didn't get an ad. Morning, Scott. I am tired, by the way. I am exhausted. I am tired. Oh, it was awesome, Pobbin. I will tell you guys, and I will make this very clear. If you ever get a chance to go to a Moab, Corona Arch is the place to go. I think I did total like 53 miles over the 4 days that we hiked. It was a lot. I mean, it was, I didn't, let me make sure my screen works. Yeah. We didn't camp. So we we got an Airbnb. So it was day hikes, but it was, 15 miles a day, somewhere in that neighborhood. 13 miles a day. It was good. Cliff, Pan W, Walmart. I'll post some photos. I probably, if anybody's new, if anybody doesn't know, I have a Insta360 camera. So I basically go hiking and I take that Insta360 camera and I just hit record. And I constantly just walk around with this damn 360 camera. And so editing and getting photos and stuff, it's just annoying. And I usually do it afterwards. So SMCI with a cross up. I think I put that in the paid newsletter. Yeah, yesterday. We're gonna have a green day except for Apple, which is gonna be brought down. But Palantir is way freaking up. Uber is way up. Yes, it will work. Yeah, so if you have, I think YouTube does it in VR if you upload it, but you can do it locally in VR so that you can kind of turn your head and just look around as well. So Shane, if you're into that type of thing and you have, like right next to me, I have an array of 5 red drives of backup, all I think 12 terabytes each. So I save a lot of my footage, and so I can put on the VR goggles and go on my hike again if I ever want to. It's not. Set up scanner to email you scan results on a schedule. Oh, wow. Wow. Ooh. Oh, new feature. New Trendspider feature. My core portfolio and watch list. It email you every sweet. Yeah, Joe, I thought, honestly, with Buffett selling Apple, I thought it'd be down below 180. It's at 182. Oh, you've got 14 terabytes. Oof. I don't have, what's it called? These are 4 separate drives. So it's essentially I keep active two actual 12 terabyte drives, I think, 8 or 12 terabyte drives. And then the 2 others are backups. So they're backed up through Time Machine on Apple. I'm not a great, IT person, but I'm definitely somebody that... Morning, Scott. Yeah, Shane. What's great about... Morning, Daniel. What's great about having the VR and stuff like that is, we were doing the Narrows one time in Zion, and I had my stick up and, obviously just recording and stuff like that. And my buddy just took a fall. If you don't know the Narrows, by the way, the best description of the Narrows, you trudge through a river for like 4 or 5 miles. It's literally, you're in the river the entire 4 or 5 miles, and the canyon walls are about 2,000, 3,000 feet on both sides of you. It's just Google the Zion, the Narrows, and you'll see the most amazing pictures. And the pictures don't do it justice. It is amazing. It is by far my favorite hike I've ever done in the world. But what's great about having that 360 stick is he just took a fall. And the best description of the Narrows is it's like walking 4 to 5 miles on wet bowling balls. And that's the description, because those rocks are so smooth. They're so slick, and they're so hard to walk on. So 4 to 5 miles will take you, about probably 4 to 5 hours. Larry! That's great. I like this. The new feature, they'll email you every morning. Ooh, that might save me some time. Walmart, Morgan Stanley, Dell with a cross up as well. GCT, PanW, and SMCI. Okay, we got those. There's a lot that's bullish right now. Bitcoin and crypto. Oh, everything in Bitcoin and crypto is bullish. BTF. IBIT, HODL, ARLP, BRRR. They all trade in the same, so I might stop doing this. Although MicroStrategy has a cross up as well. Oof, look at everything just flying. FBTC. AETH, GBTC, BITB. Joe. Oh, God. That's not good times. Check with your ranger station before you go on a hike, Joe. Actually, I've done the Narrow 4 times, maybe 5. And 2 of the times, like the week before, a bunch of people died in flash floods. Devo, QYLE, Jeppy. It's wild though. I mean, it is. Energy names. Let's see. Rig, SLB. Rig, SLB. Levered DTFs. There's got to be one. Yeah. FBL. What's FBL? Two times meta. Ooh, that's a nice one. FBL. Oof, I like that. Leverage ETF, low cost Vanguard. Do we have SPY? We have VTV. Let's see. Low cost ETF. VTV, VYM. Spider sectors. BRKB. I mean, there's a couple of interesting things, like, you know, the hymns guy saying, ooh, nice team, text, and then clarifying it and the stock soaring afterwards. Yeah, that's kind of like, duh, of course. Dexcom. Lunar, I'll put that in. MGM, AbbVie, Best Buy, ServiceNow, Cleveland Cliffs, Jeppy Team, Starwood. Starwood's interesting. Because look at that. I mean, yeah, since Tom Lee blocked me, Scott, I don't see a lot of his stuff. He blocked me on Twitter. And honestly, I haven't been watching. I took a complete vacation. So I kind of replied to some comments and stuff, but I pretty much was on vacation. So yesterday's paid newsletter, I apologize to people because it was something, I think it was good content. I think it was great content, to be honest with you, when I looked at it afterwards. But it probably wasn't my best, hey, let's think this out over a bunch of days, because it was really, I got home at 2 a.m. on Saturday, and I wrote that at about, I think from 7 till about 12. I wrote that. So it was well thought out. It wasn't like a rush job because it took me 5 freaking hours, but I just don't know why a travel stock like Starwood is down. But I mean, look at the 200 on the weekly, 200 days moving, 50 days moving. It still doesn't seem to have hit bottom though. But what's interesting is, look at this. Before the pandemic, it's $25 stock. During the pandemic, when it's shut down, it was trading around this range. STWD, let me look. Let's see. What's their problem? Let's see. Not covered on the quant. It's a REIT. I knew that one. Wall Street. Let's see. 12% upside. Does it have what the bulls and bears are saying? Let's see on the summary. Bulls say generated very solid Q4 results led by C&R. Strong history of delivering shareholder returns. I think Starwood Trust is a positive. STWD. Let's see. It's not a, I mean, God, it's a 10% dividend. Downgrade to 21.25, main average 21 to 42. I saw 23 and 24. In March of 24, he sold $2 million worth. It's not a ton. I mean, that's an interesting one. But, okay. That's the not owned list. Let's go to the Dow. And we'll look. Walmart. Intel. I do not like Intel, but I will put it in the list. IBM. Probably a good rebound. This was not, the earnings were not as bad as, at least from what I remember. This one will go, I mean, I don't think 165 for an AI player like IBM is crazy, but you are going back to, I mean, just imagine if you had bought this in 2014. Thinking IBM, it's on its 200-day. It's great. 200-day is, going to provide us support. And then 2014 comes and you just kind of lose it. Just lost it. And you're hanging on. And then finally, 10 years later, you finally get back to even. And you're like, yes. And then you see that 165 drop. I mean, just imagine. That's why stock picking matters. I mean, if you're going to play in the single space, that's why it matters. It's a great company, don't get me wrong. Fantastic company, fantastic earnings, fantastic management, fantastic everything. Just the history of that company prohibits me from saying, "Oh my God, it's such a great one." Okay. ASML. CMCSA. I would not do that one. ODFL. Old Dominion is one my dad and I got rid of half of it. I may buy it back. I mean, that's one on the pullback you want to at least take a look at it. It's just it's boring. S and P. I'm not used to typing, you can tell. IBM, CMS, Philip Morris. I'm not going to put that. Schwab. We have another cross up. Remember I said I think Schwab's going back to its $80 level? Yeah, look at that. I mean, you've got clear resistance there. If you want to buy it at 76 to 86, it'll hit it. One that I do want to look at is I think the KRB. I think the KRB might be better. No, KBR. No, banks. That KBE, that's it. KBE. That's the spider sector for banks. And I want to chart this against, select symbols, XLV. Not XLV, XLK. The spider's tech. And you know what? Select symbols. We'll do SPY. No, we'll do VOO. And we'll do QQQ. I want to see if this makes sense. Because And the new Alpha pick, Scott, it's a good play. I don't necessarily agree with it because they're saying long term. I don't think that company is a good long term bet. Yeah, see, this is interesting. So 1 year. Let's see year to date. Yeah. I'm going to copy link. We're going to say, bum, bum, bum. No. It's not my favorite. But that was interesting. Who's posting stuff? Let's see. Top cannabis REIT is flying. Eyes on Uber, Disney, and Rivian. And Coupang. Should I post this one? Wall Street get ahead. Yeah, we'll post this one. Why not? Copy. Put it down here. Okay, let's go back home. Let's see if there's anything on FinViz that LORAR, Lore Holdings, Aerospace. Dude bought $6 million worth. And it's only $88 million market cap. Wow. I mean, it's an IPO, it looks like. Nobody's covering it. Lore Holdings. Nothing I want to. Wow, nat gas is way up, so boil. Okay, we're gonna get. If you're new here, hit the thumbs up button, subscribe. I do a podcast every day that the market is open, unless I'm on vacation like last week, where I use my 4-hour algorithm in Trendspider to determine which stocks are bullish, and show you strategies to actually make stock picks. Okay, who's this? Oh, I'm getting more food delivery. I don't know if it's my house. Nope, not my house. It is going to the neighbors. I could sit here and just watch people. I love people watching. Wow, look at this strategy. This is the 4-hour strategy. Just in Schwab over 2 years, you've made 65% using my algorithm versus an 8%. Your average win is 10%. Look at this. It just got you out of 12%. I said, don't worry about it. You're fine. Boom. Okay, let's open up social requests. Goldman's list. I'm going to pull that up. There we go. Biggest movers of the day. Futures face-off contest. Wah, 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 wah. It is hot in my house. It getting hot in here. Okay. And we're going to go to the Qs. Where's the Qs? There it is. Okay. Which one? Yeah, you can link Trendspider to a broker. I think they have just a few. I don't think they have all of them. Like, I can't link it to Fidelity, but you can. Okay. I think I'm gonna hit record. I don't have a ton to go over. They're showing Becky Quick talking to Tim Cook, I guess live at Berkshire's event now. Okay. Wah, 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 wah. Here we go. Good morning. Welcome back. It's Monday, May 6th. I did see while traveling last week, and my apologies, I was on vacation. I think some people didn't know. But I did see on May 4th, we were driving around Utah, and I saw a whole bunch of pornographic Mormons who were doing things dressed as an Ewok and Princess Leia. So May the 4th be with you. What was kind of like, it was weird. It was just weird. I mean, Utah, you people are weird. It was good, though. I laughed at it. I thought it was funny. I thought it was good. But yes, I was on vacation last week, hiking in Utah. I think 53 miles for the 4 days that we hiked. It was fantastic. I mean, it was just unbelievably good. So if you have any questions about Utah, I am not a tour guide, but I did post my itinerary on the private Facebook group if you'd like to see it. But here, where are we on the Qs? So I am going to start today like nothing happened. Like, I'm not going to review when I was off, but I'm going to start today with kind of where we at. Peanut butter jelly time. Where we at? If anybody's a Family Guy fan. Here's the Qs. And I said this last week, and that 407 is probably a good support. If you're looking at the downside, 407 is probably a good support. Here's Trendspider. We're approaching the most traded price in all of 2024 on the NASDAQ. That's the Qs at 438. Acceptance of the bullish run would mean we get above this. Failure to reclaim that high is going to be bearish. So 438 is kind of where you're looking at this week. We've got a big earnings week, but 438, I think that's a pivotal point. Now, your 200-day is around 428. So I think you've got that trading range. Right now, you are trading at 436, 435 and change, 435, 48 was where you closed. You're trading at 436. Let me just scroll down here. 436.90. So you're up 0.33% in pre-market. But remember, we've seen this game in the past where it opens up and it starts going down. 2 weeks ago, it was every day we were up in pre-market and we wound up red that day. Last week wasn't as bad. You can see last week we took a dip down. Apple saved us. I'll go over all of that. But yes, Apple saved us. I want to point out Trendspider has a contest with CME Group. And it's a futures contest. And what you do is you post your financial, basically your analysis on Twitter. Like the announcement tweet, you just include the hashtag futures face off. Every week, it's $1,000 a week. Post a chart for the contract for the week with a price target, technical analysis, supports your prediction. I will put this in the newsletter. If you are not subscribed to the newsletter, subscribe to the newsletter. It's dailystockpick.substack.com. And I will put this link in the newsletter so you can see all the rules. It's $1,000. If you subscribe to Trendspider, why not? It's like probably 10 to 15 minutes of your time to post that. You can post it on Twitter. You can post it. I haven't read the entire rules. I'm going to be doing it. If you don't subscribe to Trendspider, what you can do is go to my link tree right here, linktr.ee/dailystockpick. They've got a fantastic sale going on right now. You get 6 months free. Again, it's $582 for the year. That gets you 6 months free. So you pay for a year, you get 6 months free. You save a ton of money. That's the standard. So you get 25 alerts, 10 bots, 1 workspace. That's good. If you want to go enhanced, this is the most popular, 75 alerts, 30 trading bots, 10 workspaces. Yeah, I believe that my algorithm will work on all the plans. You can compare the plans. But once you sign up, again, you sign up and you send me an email, and it's all right there on the link tree. My email address is right over here, dailystockpick3@gmail.com. But sign up for Trendspider. I will email you my 4-hour algorithm, my 65-minute algorithm. I will email you the watch lists and all of the scanners that I use. What's nice, they just implemented this. There's an email. So when you scan, say you scan my watch list, the Daily Stock Pick watch list. It's 40 names, 50 names, somewhere in that, or the core portfolio, which is 35 names. But you want it daily. You don't want to go in the Trendspider every morning and you want it just, you want it sent to you. You can email you all of the stocks that are bullish within that watch list, a list of the entries on the 4-hour algorithm. You can email yourself a list of the exits on the 4-hour algorithm. So it's nice. Email twice a day. You can get it based on a time, whenever you want. If you want it sent at 8 a.m., you can have it set up at 8 a.m. But yeah, Trendspider, it's the number one charting platform. I think the contest they're having is fantastic. They always improve this. It's definitely by far my favorite charting platform. Biggest stock movers of the day: crypto stocks, MPW, and LAZR. On Monday, Bitcoin went up. If you didn't see it, Elon said Dogecoin was accepted in Tesla now and probably sent everything going crazy. Luminar Technologies, this is the LiDAR company, I believe, plunged more than 12% in the morning. The company's announcement on Friday regarding a workforce reduction. Again, good companies with good products, with good earnings, with good management. LAZR is not one of them. Medical Properties Trust shares tumbled 17% after its largest tenant, Steward Healthcare, filed for Chapter 11. MPW, it's a REIT. I'm not a big fan of REITs. I think you get into them for income, and I think that's it. But we can take a look at that one if you want me to. Just email me and let me know. I thought this was interesting, and I took a look at this prior to getting on the air. It wasn't something that I contemplated, but I saw that Schwab was up, and it crossed up on the 4-hour algorithm, and I wanted to take a look at this. KBE, which is the spider sector for banks, this is the S&P spider sector for banks. The symbol is KBE. When you look at it for 1 year, tech has done really well. I was looking at my portfolio. I think I'm up somewhere in the neighborhood of 25% over 1 year. Now, year to date, I'm still down. Apple got me closer to even. I'm still 1% down, I think, year to date. But remember, my actual portfolio is made up significantly of Apple. So do not follow my lead. I don't suggest you follow my lead, but I use Apple as my savings account. It's worked for me over the years. Not to say that the past returns will predict future returns, but I wanted to take a look at the banks versus the technical sector, the tech sector. And so I included QQQ, I included VOO, and I included XLK. VOO is just the S&P 500. KBE for 1 year is up 43%. The VOO, which tracks the S&P, is up 26%. XLK is up 37%. Now, obviously, Qs are up 38%. So all of them exceptionally good, okay? Now, KBE is beating, which means the banks over 1 year. If you had bought the banks last year, when we were in that banking sector crisis because Silicon Valley Bank had just failed, there was, hey, we might go into this. There might be more problems. We were still raising rates last year. It was an issue. Now, when you go to year to date, this is the point. KBE is up 1.5%. XLK is up 5%. VOO is up 7%. So timing matters. That's what I want to point out here, is that when you look at your returns, understand that timing matters. Yes, I'm not up year to date, but I am up way significantly higher than I was 2 years ago. And so when you want to weigh your risk factors, I think that's important to try and look at. And so 1 year, banks are up. When you go to 3 years, the banks are actually down. It's down 6.38% over 3 years. Meanwhile, XLK is up 49%. VOO, 27%. Still, very good return, just under 10% per year. The Q's, 32%. So make your choices. Understand that tracking is important. Tracking here on Seeking Alpha, it is one of the best features, and it is free. I like to do these different charts, comparing different stocks, comparing different ETFs, just looking at the total return. And that portion is free. I would suggest you get Seeking Alpha Premium. So whether you're going to sign up for premium or free, go over to my link tree and click this link, get Seeking Alpha Premium for $50 off, because say you want just the free one. Go over there, click on this link. At least you'll have the $50 off if you decide to sign up. Because I think there's a lot of tools in Seeking Alpha, specifically the quant. Because we can go over here to the summary on KBE and we can take a look. Well, what does the quant say? It says buy. The quant says buy. It's covered by the quant. The momentum, A. Expenses, B. Dividends, B. So banks, it's a buy. When you look at the sector equity, and this is financial ETFs, the number one, KCE. This is the spider sector for capital markets ETF. You can take a look at this, KBWB. Again, they're different bank ETFs. That's why I think Seeking Alpha is one of the best platforms that you can use. And for $189, again, you save when you click on that link. You get to this page, you get 20%. It comes with a free 7-day trial. So whether you're going to sign up for free or pay, I do think it's one of the best. Another learning that I wanted to make during this one is HIMS. So if you didn't know, the HIMS CEO came out with a very and this is not a political thing for me. He came out with a controversial tweets about the Palestinian protests. The stock took a dive, an absolute dive on Friday, 8%. Now, he clarified them over the weekend. But the reason I'm bringing this up is not to promote, hey, the CEO said this and we should be selling, blah, 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 the whole thing. But the reason I'm bringing this up is I constantly say this. Any reaction in the market is an overreaction. Today, HIMS is up 3.2%. This had nothing to do with the business. This had nothing to do with the actual business of HIMS. Now, HIMS, you can think that it's not a good buy. Seeking Alpha analyst thinks it's a strong buy. The quant says hold. When we go and look at the quant, you can see it's the valuation. The valuation is the reason for the hold. But his tweet had nothing to do with the actual fundamentals of this business. So when you go and look at the chart and you say, oh, it's probably going to use that 200-day as support if it goes down. Now, they do have earnings coming out today after the bell, I think. Yes, today after the bell. He will get hammered on that call about this. It will not be about the business. And the choice is, hey, do we think that this one has gotten hit enough? Here's just so you know, the 4-hour algorithm makes you 189%. You have 27 positions over. Again, your average win is 25%. You win 33% of the time, but it protects you from the downside. And that's what the 4-hour algorithm is about. But this news story is just about, hey, make sure that if there's a reaction in the market, go and do your research, but it had nothing to do. I could have told you on Friday, if we just buy this on a 5-minute chart, you can look at it, buy it on a 5-minute chart, and it's an overreaction. We can take a look at a 5-minute chart. And I should do the after hours because you can see there was no real reason to buy it on Friday. other than this morning, you could buy it, and I guarantee it's going to be up. They're coming back. So, but the earnings could bring it down. Who knows? Higher for longer. I don't know much about the business. What I do know here is Goldman. Well, before we do this, I just wanted to mention Apple. I put Apple. I put it as part of the Daily Stock Pick newsletter on yesterday's newsletter. That is a paid newsletter, but I decided, for free, I'm going to put my Apple analysis in there. So at the newsletter, there's all the analysis of Apple that you want. I'm not going to go over it again. Go to the newsletter and look at it. But Apple shot up on Friday based on a record buyback. And then it was announced on Saturday that Berkshire Hathaway sold $115 billion of Apple stock. I thought Apple would be down significantly. It's not. This entire time, when you see this at 195 going down to 169 here, this was the time when Warren Buffett was selling. And so when you sell that much stock, in the market, even though it's protected, they're not selling it all in one batch. There's downward side pressure when you sell that amount of stock. Now, what's going to happen is I thought it would be down way more. Market sentiment, but we don't know. It's only 9:19 right now, so the market hasn't opened. I don't know what it's going to perform today. I would still say after their earnings, you wait for 3 days to buy it. I do think we're capped at about 200 on this one. I think when you get to the 195 to 196, I think you trim this one. I think you look at that resistance that we've had up here at 196, 198, and you say, I'm going to trim it. Because can I buy it back down at the 170s? It's all dependent on WWDC, the Worldwide Developers Conference that's in June. That's what's going to determine the forward path of this company stock. I'm not saying I'm getting out of this, but I will start trimming as we get closer to 190 in my retirement accounts. And the plan is, I put the plan that I have in there for the paid newsletter subscribers. I've got a plan using covered calls, things of that sort. So I put it in the newsletter. If you want a free 7-day trial, I think there's a free 7-day trial. You can get it. But again, the paid newsletter has all of those details. And again, I wanted to say I thought Buffett's sale would have taken the stock down more. It's at 182 right now. I thought we were going to open up at about 175. But you can clearly see it. If he's selling that amount of stock, he probably started in early February, and sold all the way through here. You can't sell that amount of stock and not have the stock react like that. So I also, before we get to this, I wanted to point out NVIDIA and SMCI were up in pre-market. They're starting to come back down. We're starting to see, again, when the market opens, it could start to come back down. But NVIDIA and SMCI are up. I put my plans with those in the paid newsletter. You can read all about them. So yeah, let's go to, I love this list. This list right here. Goldman top 50 strong balance sheet stocks. So I talk about it all the time. For the core portfolio, I picked those 35 stocks, and they are good companies with good products, with good earnings, and good management. This is a list by sector from Goldman Sachs with it's a thing called analyst listed strong balance sheet basket. Stocks that have outperformed weak balance sheets, stocks by 5 percentage points year to date at 6% compared to 1%, according to the U.S. Weekly Kickstarter report. Wrote the preference for stocks with a strong balance sheet and high returns on capital has been one of the many factors that outperforms the mega cap tech. The Altman Z-score is a measurement used to predict the chances of a business going bankrupt in the next 2 years. It is composed of 5 ratios: working capital, retaining assets, earnings, EBIT. These are the constituents of the strong balance sheet basket with data as of April 25th, ranked by the Altman Z-score. So these are solid companies with good balance sheets with that should outperform. Communications, Google, Meta, Netflix, Electronic Arts, Walt Disney, who reports tonight, Deckers in the consumer discretionary. That has just been an outperformer. Lululemon, Chipotle Mexican Grill. Lulu has been, by the bounce. Tesla. I don't think that Tesla is a good stock. I think we have more downside. But you can't argue that Elon Musk has done amazing things with that company when you've counted them out. Energy, EOG, Exxon, Valero, Materials, Steel Dynamics. All of this will be in the paid newsletter. I will include that link to this. I love this list. I thought it was really, really good. Today, what are we looking at? This is the week ahead. Eyes on Apple, Uber, Disney, Rivian, and Coupang. You can see the earnings spotlight. I will have my own earnings section here, but you can read this article. Volatility watch. Options traders trading volume is elevated on DJT. If you didn't know, their accounting firm was just charged by the SEC, not based on DJT, but some other stuff. DJT just fired them, but it goes back to show what a shill company that is, what a crappy company that, it's Donald Trump. The guy has, grifted for many, many years. It's another grift. So IPO watch, the Proficient Auto Logistics, the Jacksonville-based firm, investor events, Disney earnings preview, Apple event. Apple will hold a special event that is anticipated. It's going to be iPads. I mean, it's iPads. It's not that big of a deal. I don't think I don't think that's going to drive the stock. What's going to drive the stock up is probably the Warren Buffett news. That he's already sold what he wanted to sell. And the WWDC. I do think that the WWDC developers conference with the AI stuff, I think it's a buy the news, sell the event. I do think that it's that. Now let's go to earnings. The big one today is Palantir. Wedbush says they're likely to have a positive quarter. I do think that Palantir has a good one. It is a stock in the core portfolio. It is up 4% in the pre-market. It's at 24. Where'd the algorithm get you in at 22? You make 34% on the algorithm. Buying and holding makes you 123%. That's why it's in the core portfolio, is because if you buy this, I think you're likely to remain consistently profitable. So no matter where you buy it, I think you can go up. The algorithm just protects you in this one. It protects you from that huge downside. Got you in at 22. You're at 24.35 right now. And that's right before earnings. Now, when we go to Earnings Hub, I'm going to open up earningshub.com. It is my favorite earnings platform, and I really, really like it. It is 100% free. You do not need to pay for it. And even if you wanted to pay for it, 1 year of this is $1, and it's not linked. I'm not an affiliate. There is nothing that I have. But Palantir reports, what you do is you click on Palantir, and it brings up all of the relevant data that you want, all of the revenue historically, all the way back to 2021. Look at how that's going up. Earnings per share. Look at how that's going up. You can see all of this. Now, the estimates, 8 cents per share. What'd they report last quarter? 8 cents per share. They were only expected to do 7 cents per share. If they do 9 cents, look at what that stock did from 17 to 25, I think, just based on that 14% beat of 1 penny. Now, revenue, $625 million. Last time they reported 608. That's going to be the key. Earnings Hub provides you this AI summary. You can read the full summary. I did not pay for the $1 for the full year. I just don't care that much about looking at the earnings. I get it from Seeking Alpha. So do I need to spend another $1? No. Could I? Yes. I love these guys. These are the guys that do Savvy Trader. I really like this. But Palantir is expected to go up. Now, let's look at Disney. Disney is reporting tomorrow morning. If we look at Disney, you can see if we look at the revenue, it's all over the place. But when you look at the earnings per share, $1.10. What did they report last time? $1.22. Interesting. Reduced, from $1.22 to $1.10. Revenue, $22 billion. Reported last time, $23 billion. It's interesting. But remember, Bob Iger threw the kitchen sink at last earnings back in February because in March, he had a shareholder revolt with Nelson Peltz where he was trying to replace board members. So this one, I don't know what to expect. If we go and we look at the chart of Disney, again, this is a core portfolio name. And I think it's something that you should have in your portfolio. If we go and we look at this, right about here, you're looking at a little bit of a turnaround. The algorithm got you in at 112. Now, here's the big one. The algorithm makes you 29% over 24 months. What do you get if you just bought it 2 years ago? You're up 0.6. All of these little buys down here were actual indications that you should buy the stock. I wasn't sure, but this $90 one, my average price on Disney, I think, is somewhere in the 92 range. Yes, I bought up here at 120, I think, 2 years ago, somewhere around there. Yes, I bought at 110. We're 112, 113 in pre-market. It's expected that these will be good earnings. We'll go back over to Earnings Hub. After the bell, what do we have? We have Occidental Petroleum. Berkshire Hathaway's event happened this weekend. Occidental Petroleum, what do we have? Well, last quarter, they reported 74 cents per share. That was a 4.23% beat. 7.53 billion in revenue. Well, earnings have come down. The expectations, I should say, have come down. They're expected 60 cents per share, 6.7. It's an interesting play. I own Oxy. Now, am I telling you to buy Oxy? No. I basically abide by this is a $60 stock. Anything under $60, I think you buy it. Anything over $60, I think you can sell it. Now, when you get to $70 here, that was a clear sign. Sell. A clear sign. You have no confirmation. I'm not looking for you to get this. Do I expect this to be back at 70? Yes, at some point in time. Yes, I own this one. I like the dividend. I like that Warren Buffett is in it. I don't trade this one. So one that I think I want to get an interest in is this one, ANET, A-N-E-T, Arista Networks. I've said this before. And if you look at this from a 4-hour standpoint, we've got a range here. And the algorithm got you in here at 256. 256. You're at 273 right now. Their earnings are coming up. If we go to Earnings Hub and we look at ANET, where is ANET? There it is. And we look at ANET right here. ANET right here, earnings per share, $1.74. What did they report last time? $2.08. Revenue, $1.55 billion. What did they report? $1.54 billion. Now, ANET, this is driving part of the infrastructure of AI. I like this company. If we go to Seeking Alpha and we look at this one, I believe it's still a strong buy. It was a strong buy before. ANET, it's a hold. And the basis is the valuation. Do I think you should buy this one? Listen, I haven't gotten into this one. The algorithm, let's see what the algorithm does. The algorithm makes you 95%. Buying and holding makes you 146%. Your average win is 9.63. 256, if you're looking for 9%, which is your average win on the algorithm, you're looking at it about 8%. I don't want to get in there for 1%, but if I bought it that 256, would have been great. MACD was way down. RSI down at 24. Probably should have gotten in there. I just didn't have it on my list. Now, another alpha pick. If you don't have alpha picks, you should. There was a new alpha pick last week. Again, it's two things. It's two stocks. If you don't like doing analysis, if you just listen to me in the car, but you don't want to go in and look at all these stocks, alpha picks is the portfolio for you. What do you get? 2 data-driven stocks every month. Alerts when to sell. You get stock picks over multiple sectors. Access to alpha picks on day one. You get 20 stocks. It's over 20 stocks. The performance to date significantly outperforms the S&P. You can buy VOO. Since July 1st, 2022, VOO's up 33%. Fantastic. If you had the alpha picks portfolio, you're up 116%. Again, past performance is no guarantee of future results. But what they do is they pick stocks and they do a fantastic view and they give you all of the details that you need. Sign up for a year. Look at the details of what they give you. If you don't make the money back, don't renew. It's as simple as that. I think it's a great program. This is, again, I'm not a big, hey, I'm going to alert you when to buy. I'm going to alert you when to sell. This is a buy and hold platform. This is, and they tell you in the about section, they tell you, okay, how can new subscribers get involved? Well, you can buy 5 of the strong picks from Alpha Picks from their existing portfolio. You can also buy the entire portfolio. Say you've got $2,000 that you want to spend or $5,000. You can buy the entire portfolio. Just buy it, break it up by percentages of what it is. Use the Alpha Picks as a generation idea tool. That's what I do. They just had a new pick on May 1st. I'll tell you, I'm iffy about the pick, but hey, their performance is what it is. But one of their picks, by the way, is Twilio. And Twilio has not performed very well. What do you have? Well, reported 86 cents per share last time, 59 cents. And this is all on Tuesday after the close. So you have time today to buy this one. But they beat by 48%. Now, we can take a look at this one. It did pop on the last earnings thing. So you want to, again, what I'm showing you is how to use these tools. You can use Earnings Hub, which is free. Use a charting program. I use Trendspider. You can take a look at this. Look at their last earnings. They tanked. It was the guidance that tanked them. And they were down at 58. Great. You made 4% off of that one. You bought this and you made 4%. You bought this, you made 0.1. Right around 62, not a bad one. I think it's going to go, your 50-day is moving positive. Your 200-day moving a little negative. When we take a look at the weekly, it's got this trading range right here. Where are you in the trading range? Right in the middle. And again, it's an alpha pick. If you look at this one and it's a long-term buy, then you're right in the middle of this range. I think it's fairly valued. I've used this product before in my previous job. I really, really liked it. What do we have as well on Tuesday? We have Rivian. This is one that is going to be highly looked at because of the Tesla stuff. They just gave horrible guidance in their last earnings. We can take a look at that. It's trading at $10 right now, $10.38. The earnings expectation, $1.17 loss per share. What they report last time, $1.36 per share loss. They missed by 3%. Revenue, they beat. It was $1.32 billion. They're expected $1.16 billion. So again, I think Rivian has some problems. I would not own this one. I would trade this one. I think it's a $20 stock, but the valuation is what's always going to come down on this one. Now, the algorithm has you in here at $8.48. That's a great trade. That's a fantastic trade. Do I think that you should buy this one? I think this gap up here looks juicy between 13 and 14. But when we go over Seeking Alpha and we look at the actual stock, let's see what they say. The quant says it's a strong sell. And let's see. It says it's going to perform badly. This is why you want Seeking Alpha Premium. Has characteristics which have historically associated with poor stock performance, inferior profitability, and decelerating momentum when compared to consumer discretionary stocks. They compare it. Stocks rated sell or worse by a quant system have massively underperformed the S&P 500. Do you want to get into this one? I don't think so. If you want to trade this on a 5-minute chart, I think that's a good idea because, again, you can win even on a long-term losing stock. You can win in the short term. The company has return on assets of minus 32%, while the consumer discretionary sector median, you can take a look at this. It is just laid out there why you may not want it. Now, Wall Street says it's a buy. Wall Street's average price target, $6.38. That's 57% above where you are today. It's interesting. Again, I don't know about this one. I'm not invested in this one. I'm not trading this one. We also have Toast, Lyft, and Sonos. Now, one that I want to go over for Wednesday, and I will go over this again, is Shopify. And if we go to Earnings Hub and we go to Wednesday, Uber, well, we should do Uber because they do open before. Uber, look at this one. They reported 66 cents per share last time, 288% beat. This was the one that took it up to 85, I think, somewhere in that neighborhood. This is Uber. You had earnings per share estimates this time. They're expected 23 cents per share. Reported last time $9.94 billion. The revenue should go up to $10.07. Now I can tell you, I've been traveling. I've been out there. It is I mean, just Moab was nuts. I think this is an $80 stock. I think you can buy this at 71. Do I think it's coming down to the 60s again? It may. You're getting close to this death cross. I don't know that I'm necessarily going all in on this one, but once they report earnings, I think if they're good, I think you get back to that $80 level. And I think you can buy it. Say it's at 75 and it's good news. Buy it on a 5-minute chart. Buy it when it has confirmation. Right now you have confirmation. You're over the 9-day. But that 50-day coming down, it does worry me. That's the medium-term sentiment. Now you can take a look at the long-term chart, and you can take a look at Uber. The last couple of times it hit 50 on the RSI, you had an opportunity to buy it, and look at those two gains. And those were right before earnings. This is a chart, by the way, that I put in the paid newsletter. This is the kind of crap that you get in the paid newsletter. And I say crap because, it's good stuff. But it's only good stuff if this one continues up. Now, where do I see support on this one? At 61. I think you can buy anywhere between 60 and 80, and I think you'll continue to go higher. Remember, Uber has issues. The reason it's coming down is because of Tesla's robotaxis. That is so far away from being the actual truth. And if you don't think that Uber will license Tesla's technology to try and get them robotaxis as well, you're crazy. They're going to make money. These guys have the lead in this market. They are doing freight. They are doing Uber Eats. They are doing personal movers. They are in the categories. Their CEO, again, good company, good earnings, good product, and good management. The management is what I'm betting on this one. Now, the next one that is reporting on Wednesday pre-market is Shopify. I have said this before. It's an $80 stock. You can buy this one, and I think it's back to 80. I think it's 85 is the gap on this one, but we'll look at it. Reported last time, 34 cents per share. Earnings per share estimate this time, half that, 17 cents. Reported revenue, $1.84 billion. Reported last time, $2.14. So they have reduced their expectations. You can see the revenue continuing to move up. Earnings per share continuing to move up. I think this one is a solid buy. Now, am I buying it here? I think my average purchase price is somewhere in the 50s or 40s, somewhere in that neighborhood. But I do have a ton of lots at 75. Be patient and add more when the algo gets you back in. The algorithm makes you 54%. Buying and holding makes you 76%. I buy and hold this one because that performs better. But I also believe in the company. And the gap that I was talking about, 84 is where it starts, up to 89. I think it's an $80 stock. At 75, at some point in time, you get back to 80. So if these earnings are horrible, just say that they're horrible, then I think you still have an opportunity to get above this. Right now on the weekly, you're seeing it. 82 is resistance, but I think it's an $80 stock. At some point in time, the 50-day just moving up, still moving positive. 200-day flattened out. If we go over to Seeking Alpha and we look at Shopify and we look at this, let's see where it is. Wall Street, average price target, 84, up 12%. Quant has it as a hold. The reason the Quant has it as a hold is the valuation. But if you guys have listened to me a lot, Steve Kress, who is in charge of the Quant for Seeking Alpha, he has said this PEG is his favorite metric. This puts in price and growth. 1.47. Where's the sector median trading? 1.91. You're trading 22%. So as long as they continue to grow, this stock should appreciate. And it's up 0.97. It's at 75.18. So again, you want to take a look at that one. If we go back to Earnings Hub and we look, and again, Earnings Hub is what I'm using. For Wednesday, you've got Shop and Uber. I put a bunch of the other ones that I'm looking at in the paid newsletter. So if you're interested, again, the paid newsletter, you have a free 7-day trial if you want it. Let's see. Thursday, before the bell, you've got Roblox. Okay, Roblox is one that's in the core portfolio. It is, reported last time, a loss of 52 cents. They're expected to lose more, 53 cents. Reported revenue, $1.13 billion last time, $931 million this time. It's expected to go down. I have said this before and I'll say it again. The reason Roblox is in the core portfolio is not because I believe it's fantastic right now. It's because you buy it under 40 and you sell it over 40. Now, when you look at this range that it's currently trading in, we are at the bottom of the range. The top of the range is 47. We've hit that twice. And ironically, you hit that last earnings. You've come down as they have said, hey, they're losing more money, but expectations have come down. The RSI, incredibly high right now. It's at 67. The algorithm got you in here at 36. 36 was where you should have bought because then you can sell it for 40 at some point in time. Again, you're looking at the algorithm as an entry point. Now, what else is reporting on Thursday morning? It's GCT. It's Giga Cloud Technologies. I think that's what it's called, Giga Cloud Technologies. Giga Cloud Technologies. This is an alpha pick. This is, last time they reported a 50% beat, 87 cents per share. This time they're expected to be down 62 cents per share. $243 million in revenue. Reported last time, $244 million in revenue. So what do you want to do with GCT? I'm holding. I bought 2 or 3 lots. I have a nice mid 5 figures position in this one. Ironically, the algorithm gets you in at 37.20. Now, the algorithm makes you 283% over 20 months. 16 positions, so not even one per month. 283% versus 91% buy and hold. This is an alpha pick. This is an alpha pick. So if you signed up for alpha picks, you got the alert and you got it here on the April 15th. And where did you buy it? You bought it at 30. Boy, you're trading at 39 right now. Again, alpha picks, if you just bought this one based on alpha picks saying to buy it, you're already paid for your year's subscription to alpha picks. It's so good. It's up 5% here in pre-market. They were reporting Thursday. Again, I went over it on Earnings Hub. It is one of those that where the expectations are down. I would expect this one to be up. Look, the quant has it as a strong buy. We look at that PEG ratio with the growth, 6.06, whereas that's 89% below where the sector median is trading. Again, it's ranked number 1 out of 5 in the consumer discretionary distributors. I think this is a good one. You can take a look at that. So on Friday, too, we have Mara, Frog, and Sound. I did want to comment real quick about Elon Musk posted something, and I think this is why the stock is up. I don't know, but it's 2.9% up. Elon posted that Berkshire Hathaway should buy some Tesla stock. I mean, he's clearly just grabbing for straws. He's getting huge headlines from that. Understand, Tesla's main advertising is Elon. He's in the news every freaking day. Oh, and by the way, if you want to trade Tesla, my algorithm makes you 103% over 24 months. You know what you get? If you bought this 24 months ago, you're down 38%. My algorithm's average win is 18%. Well, let's see. The algorithm got you in at 160 right after the earnings. 160 it got you in. What are you up? 15%. I would expect that additional 5% to pull you up to that 200-day. Do I think you should buy and hold this one? No. I think you wait until there is some more stability in this stock. I've said it before that the last time the margins were in question, it was a $101 stock. What has he done? He's laid people off. He's cutting his costs, and he's cut the price of the cars. But he's also made some crazy announcements about the robo-taxi, about full self-driving. Yes, full self-driving is very good. Am I driving it, using it on my Delhi streets? No, it's the crazy people that are doing that right now. Am I using this on a Costco parking lot on a Saturday? You'd have so many people barking at you. But it was pointed out before, again, when the RSI got below 30, these 3 times, those were all bounces. Look at that bounce. Look at that bounce. Is this a bounce? Could be. I mean, it's a bounce. I think you're going to get up to the 200-day, which is about $200. And I think that's the top. Do I want to buy it at 186 and think that it's going to fall? No. I don't want to buy at 186. But this is a stock that's down significantly. So but it's still, look at that trend. If you look at that trend, it's just not a good trend to get into. So let's look at some social requests. 2 Mile, ACHR. ACHR. This is Archer Aviation. Come on. I don't have to look at this one. I know this is a hope and a pray. This is a hope and a pray. Archer Aviation. Let's look at the weekly. I mean, it's an IPO. Has it come out? It's trading in a range. I mean, between $1.80 and $7. Trade it. 2 Mile. I don't think we can go ACHR. We can go to Seeking Alpha and we can see it's a hold in the quant. Let's look at the summary of this one. You can see that the Wall Street says it's a buy. Profitability is an F. The reason it's a hold in the quant is probably this profitability. It's just not doing well. Return on common equity, they're losing 106% of their equity. They're going to dilute you. I don't like this one. I mean, again, wait until they actually start making money. When they make money, that's when you want to get into them. Butch, in the private Facebook group, he put 2 stocks in there. Unity Software, which is interesting. Unity Software, they create software for AR, VR, metaverse, and digital twin creation, widely used. It's a hold in the quant. But what I do want to point out is from a valuation standpoint, again, we look at that PEG, it is undervalued. They're reporting this week, I think. Unity Software. Let's go over here and we'll look at the chart. And they do have a new CEO. He points out prices in 2-year accumulation zone. I think if you have patience and diamond hands with this one, you'll be rewarded over time. This industry, in my opinion, will eventually thrive. I don't know that the metaverse is going to thrive. I do think that AR and VR will thrive. But you can see right here, he's right. That right now, I don't think that you have confirmation. Their earnings are coming up May 6th. Let's see. Let's type in Unity. Let's go over to Earnings Hub and type in Unity. Let's look at it real quick. Unity Software right here. Did they report already? Let's see. They are reporting in 3 days. And you can see earnings per share 66 cents. They're expected to report 62 cents. Reported $609 million. Estimate $431 million. Refocus its portfolio of products with unique value for customers, which has been well received. The company has implemented a leaner cost structure, allowing for scalable and profitable growth. So they're actually making money. I mean, again, you can take a look at this. The reason it's probably it's not a buy in a strong buy is because of the momentum. Look at the 3-month performance, 6-month performance, 9-month performance, 1-year performance. It's all down. So I'd say you trade this one, but if Butch is right, they have a new CEO, new focus. I like this thing. And he also mentioned Oracle, which is a great company. We can look at Oracle right now in the 4-hour algorithm. This is a company that's taking Uber from an on-premise server to a cloud-based server. They will probably be involved with the TikTok stuff. The algorithm got you in at 118. You are trading at 116. The algorithm makes you 49% buying and holding. This one makes you 57%. I would say anytime you get close to this 200-day at 114, you probably want to buy it. I do think that you have a tremendous opportunity in this company. I think, I believe that green line right there is support at 106. I think that one, anytime you get close to 110, I think you want to buy it. You can see the volume shelf picking up here, up at the 114 to 116. It's just getting ready to move higher. Do I think this is a great short-term buy? I don't know. I mean, we can take a look at their earnings hub right here to see when they are announcing ORCL. Let's take a look. ORCL Oracle. They report in 35 days, so it's not anytime soon. They reported last time at $1.41. Their expectation this time, it's not even posted yet, so we'll see it closer. But I like both of those. Now, Trendspider, like I said, they have a new feature, which is nice because say you want to go over here to the market scanner. and you want to use my scanner, which is the daily stock pick scanner. This shows you when you can enter in stocks, and you basically use my watch lists, which I have the Bitcoin ETFs, I have core investments, I have covered calls, I have energy names, levered ETFs, low-cost Vanguard ETFs, spider sectors, and the personal watch list. The core investment is the core portfolio, and you scan this. Now, here's the thing. I scan this every morning, and I look at this every morning to try and see, okay, which stocks in the core portfolio are cross-ups, and that's when at the end of the newsletter, if you go down to any newsletter that I have, not this particular one, but if we go to, let's see, here we'll go down to this one. I think it's going to be down below because this is the paid newsletter. That's all the charts and everything that I do. And if I go down here and I look at the latest, and I just go 5-1 pod. Okay, this was the May 1st. Do you want to sell in May and go away? I said no. I was right about that call so far. But if you go down here and you look at the scans, there were very few on this day. Doesn't mean that, you want to stay out. Just means that, but these are the stocks that you see. And so if you have Trendspider and you want to do these scans, you can do it yourself. Now, what the new feature is you can click on the 3 dots and you can hit email. Run this scanner on a schedule. It will email to you every morning the results. And say you want to look at the just the not necessarily even the core portfolio. Say you want to look at the watch list. By the way, on the core portfolio, SMCI and Walmart. If you want to just look at the personal watch list that I've set up that are stocks that I either trade, own, or I think that you should own, you take a look at Tech, AMD, Team. Mara had a cross up. If we look at the Mara chart on here, it's up 10% today. And this one had a cross up. GBTC cross up 2% up. GCT up 4.5%. We went over that one. So here's how you use Trendspider. You go to that scanner, and then you go over here and you use my 4-hour algorithm, and you click on that, if I can get it. And then you run that 4-hour algorithm, and this is Marathon. This is Mara. And it has an entry here today. Hasn't displayed the price yet. It will. Oh, I'm sorry. It will. It will later. It will display the price, probably about $19 or so is when you'll get in, but it's up 10% today. So again, the algorithm works. The algorithm got a ton of stocks, and I'm just going to point out a couple, but if you want the full list, just go to the newsletter. FBL is interesting. FBL is a 2 times levered meta strategy. This one got you in at 2140. Right now you're trading at 2280. Is this one going to go up? Boy, it's oversold. Boy, there's a nice juicy gap up to 25 here, 2618. Nice juicy gap under the 200-day. 50-day still moving negative. Is Meta going to turn? I like that one. FBL is the thing. Now, what I can tell you too is that if I were trading last week, I'd have bought Berkshire. Berkshire, of course, it's up after the annual meeting. It's up 0.12%. Got you in at 402. Do you want to buy at 402? Well, it's at highs, not at all-time highs, but it's at highs. Your all-time highs are 420 something. I think it's, 430. 430 is the all-time high. If you look at the weekly, this is just a good ETF because they are just that good. They're they will not buy Tesla because Elon is erratic as F, and he doesn't like that type of management. It may be the greatest company in the world. He doesn't like that type of management. Good company with good products with good earnings. That's Tesla. Right now, Elon's management is a bit erratic, and I don't think that Warren Buffett would want that. So that's what they said. But it's an interesting one, and I should have bought it. Now, one that I actually really like, and I tell you, this is an $80 stock. It's at 76 right now. It's an $86 stock. I think that's the resistance level is 86. It's Schwab. Schwab with the 4-hour algorithm makes you 65% over 2.5 years. 22 positions, so you don't even trade once per month. Yes, there's some losers like this one. 2% down. Got you right back in. Nice 12% gain. Got you back in at 73. So what does the 4-hour algorithm do? It protects you. How much is it? Well, let's go over to Trendspider. It's $582, $48 per month. If you're not making enough money If you don't have a large portfolio, you're not making $48 per month, do not get Trendspider. And if you are not a technical chartist and you don't understand charts, learn charts first on a free tool. So absolutely, 100%. I will have the newsletter up. Remember, there's only 3 things that I tell you to have. 3 tools that I have that are paid for. The rest of them are all completely free. It is Seeking Alpha Premium, which I have a coupon for, saves you $50, free 7-day trial. It's Alpha Picks, which I have, which I absolutely love their picks. Not crazy about the current one, but again, you can pick which ones you want to do. But it's $449 a year. And then there's Trendspider, which is $582. My personal opinion, first thing you get, I think it's Seeking Alpha Premium at $189. I think that's the first place you go. I think the second place you go is Trendspider. And I think the third place you go is Alpha Picks, because that gives you the ideas. If you are brand new to investing, I would change that order. I would go to Alpha Picks first. Understand why they're picking these stocks. Pick your favorite stocks, buy them. Then second, I would get a free charting program like Webull, which I have a link to on my Linktree. You can sign up and get free stocks at Webull. They have a great desktop software where you can learn charting. I have Active Trader Pro from Fidelity as well. Those are free. You don't need Trendspider, but Trendspider is just those things on steroids. And the 4-hour algorithm takes emotion out. It is fantastic. And I've got a ton of scans today. Way too many to go over. A ton of Bitcoin ETFs and crypto stuff in the newsletter. It's all in the newsletter. So I'm back. I will talk to you guys tomorrow. Have fun. Take care. Bye. Whoop, whoop. 54-minute. Oh. Ooh. Oh, here you go. Let's go to Savvy Trader. The core portfolio is doing well. I don't know against, I don't think I can do the core portfolio, but remember, Scott, the core portfolio is not meant to be oh my God, you've got to, I'm not trying to beat anything. It just so happens that I beat stuff. The core portfolio are just, when I add a company, I buy 100 shares. When I delete a company, I sell all 100 shares. So it's not something where I'm managing the portfolio. It's just, hey, here's 35 names that for the long term, you should be perfectly fine. Breaking. Oh. No, they did not. Collector. Remove. They did not. Did they? Let me see. AMC. There's no way. No, they didn't. They report in 2 days. Oh. Yeah, but this core portfolio on Savvy Trader, it's just 100 shares. So I don't what I would suggest is using those 35 names to build your portfolio. That's kind of the reason the core portfolio is there. It's 35 good companies with good products, with good earnings and good management. Now, Roblox is in there because it's a buy and sell around 40. I think that's the only one that's in there that's really, really bad. And we can look at the total gainers. I mean, I have losers. Look, Tesla's down 30% from where I bought it. Boeing is down 15%. Pepsi's down 5%. Yeah. But look at SMCI is up 160%. NVIDIA up 110. Uber's up 70%. Meta 60%. Qualcomm 50%. So, it's not all super, super high flyers like the big names. Look at MPLX. It's up 22%. And that's providing me cash. And I don't rebuy on it provides me cash to do it. But again, the core portfolio, let's see, since This was, let's see. I started this June 2023. June 2023, last year, I just bought 100 shares of a bunch of things. And I've traded in and out of them. I haven't, well, I shouldn't say. If you go to the activity, I think there's activity. Yeah, history. Down here, you can see most of it's just dividends. So, but XLK is now in there. I bought that March 12th. And we can see XLK is down 3%. Any opinion on Axon? It's at all-time highs. Isn't that the one? I think that's the one that, hold on, is that the one? Let me look. Let's see. Oh, no, that's ALAR. Axon is Axon Enterprises. Let's look at Earnings Hub because their earnings are coming out. I don't have any opinion on it, but I can take a look at it. Axon Enterprises. Let's see. 94 cents per share, reported $1.12 last time, so earnings per share. It was brought down, recorded its fifth consecutive year of greater than 25% revenue with 31% year-over-year. Company highlighted new product features like warning sound on Taser 10 and Watch Me button on body cameras. Axon acquired Fosys and Sky Hero, which are expected to unlock new solutions. I'm not going to read the full summary, but let's go to Seeking Alpha and Axon. I think this is the body camera company. Yeah. Seeking Alpha analysts say buy. Let's scroll down. Let's see. The quality of management team, the growth opportunities continues to benefit from massive addressable market. We advise Axon for long-term investors and believe it's considerable. Yeah. Taser brand. Yeah. I mean, look at the annual revenue. It's not covered by the quant. I mean, it's not my thing. John, honestly, I don't mind this company. It's just, I mean, when we look at that's a solid chart. I mean, during this time when it was going down, time to buy. But it sounds like they're doing well. I mean, John, that's a personal thing. If you're going to sit there for a 6% win, that's great. Algorithm makes you 141%. Average win is 13%. It got you in here at 305. If we just assume that you're going to make 13% on this, you probably still have some upside. But with the earnings catalyst right there, I don't know. I mean, it's not super high on the MACD. Their expectations are brought down. I mean, if you're nervous, take the 6% win on half of it and just let the other half ride. Yeah, and Tyler, vacation was awesome. DNA. What is DNA? I don't even know what DNA is. Bioware. Oh, this is the I like Toast on earnings. I think Toast has come down. Let me look at DNA. DNA is up 2%. Oof. I mean, that's ugly. Somebody tell me why you like DNA. I mean, that's just ugly. The company has a return on assets of minus 53%. I mean, Chris, I know you trade, so I think that's a good trade. But I don't think this is a long term. I mean, look at that weekly. I don't know why you'd want this one. But I don't know if you trade, Emmett. Yeah, Scott, the reason, let me see. Oh, Shane. Yes, you can. Shane, to get back to Trendspider, yes, you can set it up to trade on a bot. All of the strategies on Trendspider you can set up to trade on a bot. If you go over here, you have 10 trading bots on the standard, 30 on the enhanced, and professional gets you 100 trading bots. So you can do 100 strategies trading at one time on the professional. You can do 30 trading at one time on the enhanced. You can do 10 trading on the same. So like 10 names on the same strategy, or 10 different strategies on one stock. You can do a bunch. So sorry about that. Sorry I misunderstood. Morning, Mike. Scott, Boeing. I've been threatening to pull it out of the core portfolio because of that long-term strategy, the long-term issues. But I do like this range. And I mean, whether you think they're safe or not, they've got planes that will be around for quite a while, which need maintenance. So, and they're about to go into space. So, but at Boeing, long term, I think you're okay. I bought, I think, at 200. So I'm down a little bit. I'm not too worried about it. Again, the company is, I mean, it's not a great buy right now, but the valuation, the momentum, the revisions, I mean, growth, it's all bad. It's all bad. But for me, the company becomes interesting below 200. But I can't argue that, hey, I'm not throwing, like if I had a portfolio, I'm not throwing 50% of my money at Boeing. Am I putting some money in Boeing? Yeah. I just, I think there's better names out there, but I don't think it's a horrible one. But yeah, Savvy picks. So my Savvy Trader stuff, yes, I think, let's see, let's discover. Am I still tops best return year to date? I've dropped to number 2, 39%. The core portfolio is up 17%, and it's doing really well. But remember, that's equally weighted, and I don't suggest an equal weighted portfolio. I do pick winners per se. I just happen to have Apple, so yeah, and I can look. Let's see. I think it will update as of Fidelity will update my return as of Friday. I don't think it updates my return as of today. I don't even know if I'm up today. Let's see. Yeah, I'm even. The market is up 0.55, but with Apple, I'm just even. I'm up $298. Just so you know, that's 0%. So it's kind of flat. But let me see. And the way Fidelity works is I have to check my watch for year to date and stuff. Okay, let's see. Loading chart. Over 1 month, I'm up 3.43%. Year to date, I'm actually up 2.88%. Over 1 year, my portfolio is up 18%. So, but Savvy Trader, I try and I don't keep my portfolio in Savvy Trader. It's a personal thing. I'd prefer people not follow me kind of stuff, but I'd rather have you doing your own stuff. GCT is flying, bought AMD this morning. AMD's a good one. Man, AMD is overvalued, and their earnings are already out. But man, that one just, If you're investing in AI, I mean, that's a 154 when you just recently came off of, now that 227, crazy, absolutely crazy. And that death cross, but take a look at the weekly. The weekly, you're right at that 200, at that 50 day. I'm sorry, right at that 50 day is 136. Whenever you're close to that 50 day, it's been a good buy. I mean, it's not the best buy in the world, but it's been a good buy. So I do like AMD. Toast I like. Let's look at the Toast chart. And wow, it's 10:13. I got to get out of here and edit this thing. But Toast, I'm like you, Tyler. Toast is one where I get credit card receipts from Toast because I'll buy at this place. I mean, freaking Moab, it was all Toast. And the reason is because they don't necessarily do delivery. They set these guys up with online ordering and they take a percentage from the restaurant. But a restaurant needs that kind of stuff because they're not hiring IT people to do all of this stuff. So Toast, they have a platform. It is fantastic. I really, really like this company. Now, the algorithm got you out with a 2.57% loss. The algorithm, though, loses you 44% versus making 36% buying and holding. That just means that the algorithm, you have to pick and choose which ones you want. I would argue that trading around the MACD with an RSI at 51 around earnings, not horrible. Positive 200 day. If we look at the weekly, I don't think you have a 200 day yet. No. You're above that 50 day. Again, I think your tops on this one, you're probably going to top out. If I were to put any guess at this, I mean, 25 may be your top point. Because look, you're hitting 1 there, 2 there, 3 there, but it's providing a whole lot of recent support. So that's probably your resistance level, which if they blow out earnings or they say the consumer is strong or the restaurants are strong, we get above that. Until then, I think I'd rather wait and add at 25 than add at 23 to see it go down to 20. Just my guess. But again, I think Toast is if we look at, let's look at, it's a quant and it's valuation. But with growth company, it's always valuation and they don't have a PEG rating. So that's a high PE, forward PE, 540% above. But that's the only thing. The profitability, I mean, this is a company that's growing, so they're losing money. It's 14 out of 43, I think. PAGS. Stone Company, I thought, was number 1 for a while. Square was up there. Affirm. But yeah, I lied. You're not wrong, Tyler. Yeah, DNA, probably not bad. Is on a play before earnings. Have you ever seen the company's ad company? Let's do on first. On is a play. Oof. I mean, it never got below 30 again. And I said, play it around 30. The valuation is what's killing it. But when you look at the PEG, if they continue to grow, this is not a super expensive company. Now, everything else is super expensive, but if they continue to grow, they're not super expensive. When we look at the chart, on holdings, on. I have those on the weekly and these things. Right here is where you really want to play it. Below this one, because I think it's set up nicely to buy at that one below there, and then you can sell it here. Now, these have changed. So on, I would say we'd move this up to here, and we'd move this down to here, I would say. So I would say that's probably the new range, is buy it. Let's move this up. buy it below this and sell it in this range. Because that's dipped down there 1, 2, 3, 4, 5, 6, 7 candles. So it's put in that nice one. But you've still got a positive moving 200-day. The 50 days moving negative. And that's what worries me before. But you've got a breakout here where the Bollinger Bands are going to expand. So your guess is as good as mine. It's just that the valuation kind of hurts me. And I don't buy on shoes. So hopefully that's kind of the thing. MGNI. Is that Magnite? Magnite. I've traded this before in very small quantities because it was kind of like a meme name for a while. I don't like it as a long term, but I haven't looked at it particularly recently. You look at the PEG. I mean, it's super. As long as they continue to grow, should be fine. The valuation's not horrible. Wall Street says it's a $15 stock, but there's only 8 analysts that cover it. So if you look at revisions, 5 up, 1 down, 7 up on revenue. But the stock just hasn't. I mean, it's not one that I would suggest, but I just don't know enough about it, and I don't have any interest in it, to be honest, Mayor. So, okay. Yeah, Apple's down 0.64. I think Apple's going to use 180 as a support. I hope. NVIDIA's back over 200, 900. SMCI holding on to that 800 level. Uber's up. So, okay, with that, I'm out. I will see you guys